The Oregon Public Employee Retirement System, or Oregon PERS, is a retirement program for all of Oregon's public service employees. Unlike other states, which have individual pension programs for various professions, like one for nurses, one for teachers, one for police and fire, Oregon has just one pension program. And in fact, we are the second most complicated in the United States, second only to Illinois. So you are not alone if you are confused by Oregon PERS. I often describe it akin to tax code. It is a patchwork of acronyms and programs that have built on each other over time. Over the last decade, I have met with hundreds of people like you trying to make sense of Oregon PERS and its role in their retirement planning. My name is Brenna Baucum with Collective Wealth Planning, and in this video, I'm going to try to help you break down your annual Oregon PERS statement. We're going to take it one section at a time, looking at a sample statement. So before I begin, let's just start with an overview of what this Oregon PERS statement is supposed to provide for us. It is a snapshot of your retirement benefits and contributions, and these statements are really essential tools for those of you who are looking to understand your financial standing and make some informed decision about retirement planning. The statements have four key purposes. One, provide you with information about your pension. So whether you are Tier 1, Tier 2, or OPSRP, you have some level of pension benefit associated with your Oregon PERS retirement. That said, the information that comes on your PERS statement won't help you understand how much you're entitled to each month in retirement. Like Baskin-Robbins, there are many flavors of PERS benefits to choose from, and I will talk a little bit more about that later. Second point of this piece of paper is to report on your years of service to help determine retirement eligibility as defined through Oregon PERS. So when you started, you became an active member after your 6-month waiting period, and you are vested as soon as you complete at least 600 hours of service in each of 5 calendar years. So this is a little confusing. They don't need to be consecutive years, but there can't be a gap of more than 5 years between the years in which you accumulate those hours. Hopefully that tracked. If you reach normal retirement age, you become vested regardless of your years of service. And the biggest difference between Tier 1, Tier 2, and OPSRP regarding retirement eligibility is what is considered to be the normal retirement age. And you can learn more about that on the PERS website. I have some links in a post about this. So the third point of this piece of paper is to provide you with information on your IAP, or individual account program. This is a defined contribution savings plan designed to supplement your pension. And through the IAP, you or your employer can make 6% contributions from your paychecks, and those are invested. And then when you retire, you can access that IAP account alongside your pension and offer you some more flexibility and control over your retirement assets and planning. And the fourth point of this piece of paper is to provide information on the Employee Stability Account Program. Employee Pension Stability Account, EPSA, that's it. This account is relatively new. It's a new addition to PERS starting in July of 2020 and was created to address the increasing cost of funding pension benefits. And its purpose really is to ensure that your pension is there when you retire. So while there are key differences between Tier 1, Tier 2, OPSRP statements, most of them contain the sections that I have just discussed. And you will find examples of all of these in the blog post I'm going to link to in the video below. And there are some hyperlinks that'll take you to PDFs that have pop-up comments. It's incredibly helpful. All right, let's dive into the key components of your PERS statement and go through each statement section by section. All right, let's start at the top. Your personal information. The top of your statement is going to cover the brass tacks: your name, your address, your date of birth, your PERS ID. That's an important number. If you ever call up the PERS office, you want to have that handy. Below that, you're going to find your first hire date. This is the date when you were hired, and the membership date is the date when you became eligible to make PERS retirement contributions. This is usually 6 months after your hire date. You're also going to see job classification. Your eligible retirement date depends in part on your job classification, with earlier retirement dates available for police and fire members. A great planning opportunity to explore as you get closer to retirement is the ability for Tier 1 and 2 members to buy back service credits. So you can do that with the waiting period, that 6-month period between your hire date and your membership date. You can buy that back And that can not only expedite your eligible retirement date, but also increase your lifelong pension amount. So kind of a win-win there. The next section will focus on your pension, and there are differences between what shows up in this section for Tier 1 and 2 and for OPSRP statements. So let's take a look at both of them. If you are a Tier 1 or 2 employee, you're going to see an overview of your account balance and earnings rates for the regular account. If you participate in a variable annuity program, you'll see that information listed. The regular account earnings rate is a fixed interest rate adopted by the PERS board annually. The variable account earnings are based on your account balance, an assumed interest rate, and an annuity factor determined by your age. The risk with a variable annuity program is a bit higher, but so is the return potential. You can determine whether you want your pension to be fixed or variable at retirement. As the name implies, the variable option will change from month to month. The balance listed will be used to pay for a portion of your benefit. This doesn't represent your total pension, as it doesn't include what PERS will contribute. PERS uses 2 or 3 methods to calculate your monthly pension, all of which rely on your years of service to some extent. Your years of service credit will increase so long as you work 600 or more hours in a year. Police and firefighters can purchase additional units with after-tax dollars to provide additional monthly income, usually for 5 years. Let's look at OPSRP. The 1.5% formula for the OPSRP pension is designed to give you about 45% of your salary during retirement. So if you're trying to do any back-of-the-napkin planning, that information might be helpful. Vested status helps you understand if you can receive a pension through PERS, even if you're no longer working for a PERS employer. Retirement credits refer to the amount of time you have worked for a PERS employer. And again, those will increase as you continue to work 600 or more hours per year. An important point here. Frustratingly, for some of us, the monthly pension benefit amount does not appear on this annual statement. So if you want to get an idea of how much money you might earn monthly in retirement from PERS, I highly recommend going to the PERS Online Member Services website and pulling a pension estimate. So while you cannot get a formal benefit estimate from PERS, until you are 2 years out from retirement eligibility, you can use their online resource to pull estimates as often as you like. If you prefer to calculate your estimate by hand, maybe you love math, or maybe you hate online logins, you're going to need to collect and know your 3 highest grossing years. So I have added the calculation for each of these to the post below. And they're a little convoluted to do it by hand because Tier 1 is going to add the formula plus annuity and the money match to the amount that you come up with. Tier 2 is going to add the money match. And these quirks mean that the back of the napkin estimates are often more conservative than what we find when we pull up an estimate. So this nuance between tiers is why I recommend using the online system. All right, on to the Individual Account Program, or IAP. Contributions to your individual account program are invested in a target date retirement fund. So if you don't know, target retirement funds are investment funds designed to simplify retirement planning. They automatically adjust the asset allocation mix based on the investor's target retirement date. They base that date on your age. So as your target retirement date approaches, that fund gradually shifts to a more conservative allocation, reducing market risk exposure. You can change this if you prefer an investment strategy that is different than your birth date dictates. Maybe your pension will be enough to cover your retirement cash flow, and instead you want this account to grow. That's one example. Or maybe you're very risk adverse and you want it to be more conservative. You can definitely make that change. At retirement, you have a few options for how this account can support you. You can roll it into a traditional IRA, or you can take it in installments. Often the right decision comes down to assessing your income needs in retirement. How much will your pension be? How much will Social Security be? Will you want fixed installments from the IAP, or would you prefer to keep your options open? Your IAP will function much like other IRA accounts you may have, in that withdrawals will be taxed at ordinary income rates, and it will be subject to required minimum distributions. If you have charitable intent, these RMDs can be taken care of using the Qualified Charitable Distribution Strategy. And finally, the Employee Pension Stability Account. If you earn over a certain amount, in 2023, when I'm recording this, that's $3,570 a month. If you earn over that, a portion of the 6% that usually goes into your IAP program will be redirected to fund the EPSA. If you're tier 1 or 2, that's 2.5%. It's going to go into the EPSA, and the remaining 3.5% continues to go into your IAP. If you are OPSRP, it's 0.75% that's going to go to the EPSA, and 5.25% is going to go into the IAP. Like with most aspects of Oregon PERS, there's nuance here. So I've got some supportive links below if you want to learn more. Your pension and IAP are just two elements of your retirement plan. As an Oregon PERS employee, you have the ability to purchase service credits, which we talked about. You also have access to the Oregon Savings Growth Plan for additional pre-tax savings. You also have Social Security. You might have retirement and investment accounts outside of PERS. If you're in partnership, you can just multiply the complexity of income options and tax liability by 2. This is how we accumulate wealth over our lives. And without pulling everything together into a comprehensive plan to see what's going on, it's impossible to see how they all work together. Don't hesitate to reach out if you're looking for a thought partner to process your unique Oregon PERS statement and how it fits into your retirement plan. I welcome the conversation.